Good morning, bright and shiny people.
Good morning.
It's good morning, 48 hours till the weekend. How excited are we all?
Very.
Oh, I'm taking a new attitude towards life. Everything's bullish. I'm bullish on everything. I'm bullish when it's bearish, bullish when
Did
it
you
goes down.
did you take your medicine this morning?
I just took it. So
Okay, good. I haven't kicked in yet.
you got a
Hasn't
half an
kicked
hour
in.
until the stuff kicks in, all
All
right?
right, then we'll see how
Then
bullish you are.
then I'll become Mr. Pessimism and world's ending, and I'm so excited to watch it burn.
Yeah.
Uh, so anyhow,
What's burning?
uh, and what's burning?
Yeah.
The excitement in my gut. All the excitement in my gut.
You get excitement? You're excited?
I'm excited. Yesterday I was like looking at my 12 list, and everything except for two companies is above the intermediate trend. And I expect some retest of those trends, but I'm like, wow, this is what it feels like to be bullish. This is interesting.
You're having
So
a
I
hard
don't
time
know.
with it, aren't you, Trent?
I
Let's
am.
see.
I know. No.
You got to understand the movie that calms me when I'm really is World War Z.
I love
Like
World War Z. I love that.
I literally turn that movie on when I just feel like I watch it on airplanes, and that whole thing. And
I used to do
so
that with
yeah,
Perfect Storm, where they used to be a go-to story.
I like the
yeah,
Blues
just
Brothers.
The Blues
that is a
Brothers.
good movie.
Yeah, the original.
Well,
All right,
you go to the charts, man. That's where, you don't leave it to emotions or feelings, excitement. I mean, it's excited to make money, but
oh,
they'll tell you when it's bull, they'll tell you when it's
oh
bear.
no, oh this
Yeah.
is a
Yeah.
life. This is a life thing.
No, it's a life
This is
gig.
not. This is how I monitor my happiness. All right, Mark, let's get
All
it
right, let's
rolling.
talk about happiness. We're all red today, so you can see the Dow, S&P, oil's down, 10 years down just a tad. So you know what's going on. It doesn't take long to go down and see. Oh, Walmart.
I got it.
Yeah, thanks.
Go ahead.
Walmart is talking about price hikes from tariffs. Could start later this month. Okay, so as I read through the story, um, there's Walmart is an indicator of what's happening. I was at Walmart last Sunday. Jan wanted to go, and I said, okay, I want to see if the shelves are empty or anywhere, and I couldn't find anything. But I did notice right when I pulled in, there was a couple of Mercedes and BMWs sitting out front of Walmart. So I'm like, you know, people are shopping at Walmart. Uh, but again, they're talking about price hikes from the tariffs. So what started this whole happiness last Sunday, well, early Monday morning was, we struck a deal with China and we're going to, charge them 30%. They're going to charge us 10% for 90 days. And what it really says is, from Walmart is, these prices are pretty high, and we're going to start seeing it come into the stores here pretty soon. Later this month, actually, he said. So he said that prices are really too high at this point for anyone to uh, absorb these prices, like either the retailer or the exporter, and it's going to actually have to go down to the consumer. So we'll see how long this high uh, can last on this China deal right now. There were other things yesterday. Trump was over in the Middle East, and he sold a lot of Boeing planes. It looks like so. For Boeing, that's a good news. But I'm starting to see uh, finally the price is coming back inside the upper Bollinger Band. So that's kind of an interesting thought also. So today's PPI. So Trent, that should be out right now. Retail sales today. We have Empire and Philadelphia manufacturing surveys. Walmart had earnings, Deere, AMAT, Take-Two Interactive today. We're still in earnings season. Let's go take a look and see what's happening. Let us know if you see that PPI.
Yeah, I will. Nothing's up yet.
Okay. So go take a look at the S&P. So and we went from under the 200 to over, with this was the China bump. Okay, and we're going to open a little bit lower today, right here. We pulled back with inside the Bollinger Bands. We still have some good oscillators on the S&P. We'll have to see if this is going to pull back in and if it's going to retest. Right now, we're staying above the 200. But again, this was a news-driven gap. The gaps on these indexes usually get filled. That cat's in here having a fight. So just be aware. We go look at the Qs. Again, pulling back inside the Bollinger, but here on the Qs, we actually have a resistance level right above it. We're going to open up lower than the close yesterday. Oops, cancel. But again, we're over the 200, and we'll see if we're one news story away from going up higher or one news story away from going down lower. That's just the way it's been. We haven't really fundamentally changed anything since the announcement on Sunday morning with the entire market itself. Now the Dow actually closed back down. It got above the 200 for a day, hit resistance like we're seeing in the Qs, came back down, and now we're 2 days underneath the 200. So that didn't last yet. We'll see where it goes. Here's where we're going to open, down again, but we'll see about the 200. So again, we're not quite out of the woods. It's not quite time to party yet. I mean, even though it looks good, we have to sustain it. And when we have these resistance levels, it's hard to get past those. Gold, we talked about gold yesterday. Gold just kind of spotty all around, and it's come back down to the lower Bollinger Band on gold. So again, when markets go down, you'll see gold kind of go up, but the oscillators aren't looking too good on gold either. So just keep that in mind. Bitcoin just kind of moving sideways. It came up and hit resistance several times, and now we're just down. We're still above 100. We're at 102.6, right on the 9-day. On Bitcoin, we always back out a little bit to see what we're looking at here. You can see here's where the resistance, right about where the highs were, and we'll see if it can bounce off this 9, get back up. Oscillators are kind of flattening out, but it's holding in there. When you think about Bitcoin, and of course then it's MicroStrategy, and it's amazing what the charts will tell you. Even in Bitcoin, MicroStrategy has come up 1, 2, 3, 4, 5 times, hitting the intermediate resistance level and hasn't been able to get by it. And we're going to open up a little lower. So again, here we got this pattern. The 9's coming up, starting to roll. It'll get closer to the resistance level, and then usually it'll probably come back down. We'll see if that pops us down below the 9, on MicroStrategy. But we're going to look to open up a little lower this morning on that particular position. Mag 7, that's what's been really fueling this run. Again, that Trent was just telling me how much, what was it, NVIDIA did 17%. Was that it, Trent? Of the move yesterday?
Yesterday's move represents 17% of the move in the S&P 500.
From NVIDIA alone. Yeah.
And the closest to that was Google at 5 or so percent.
Yeah.
They had a buyback.
We're following.
Yeah.
But we're following, the upper Bollinger Band. I look for this to move back in today. And it's hard. You can chase these up, but the Bollinger Band is not a place, the upper Bollinger, that I would buy at, just because it's at the high. You're even though you've got the momentum, it will pull back inside. But I don't. Most professional traders won't buy on the upper Bollinger Band. Some will. It just depends on your risk. I don't actually do it, but again, we're over the 200. We'll see if we start pulling back in, and again, this is all because of people buying back into the Mag 7s. And here again is NVIDIA, 1, 2, 3 times outside the upper Bollinger Band, and that won't be sustainable. And we are coming up on resistance and sell orders right above NVIDIA. So I'm looking for these all to start pulling back inside that Bollinger Band. But again, we're above the 200. That's a good sign if we can sustain it.
Hey, Mark.
Yeah.
Mark, the producer price index reported The producer price index for the final demand fell 0.5% in April, seasonally adjusted, the U.S. Bureau of Labor Statistics reported today. Final demand prices were unchanged in March and increased 0.2% in February. On the unadjustable basis, the index for the final demand rose 2.4% for the 12 months ended in April.
Okay.
So
Not a drastic rise in the producer price index. So
no, yeah, just actually a decline of 0.5%. So
that'll be interesting to see what the Fed does, because they were worried about inflation and the tariffs. If so we'll have more emphasis on, if they're going to lower rates or hold or whatever.
they still haven't reported anything on CNBC about it. So
Okay.
it's
Yeah.
not that big a deal, I guess.
Yeah, Steve Leisman must not be awake yet, so we'll see. All right, back to charts meta. We were running across the 200, then we had the China bump, and then we followed the upper Bollinger. We're going to open right here lower, but we pulled back inside even with meta. You can see sell orders and resistance levels. Again, when you buy on the Bollinger Band, just understand it only trades outside of that 5% of the time on average. And after 4 or 5 days, you will pull back in, if not sooner, inside the Bollinger Band. It's not a bad thing. I'd rather trade between the support, which is the 9, and the Bollinger Band. But when you buy on the Bollinger Band, you're relying just on momentum, and your risk is down to your first level of support. Your reward is normally just the Bollinger Band, and up to where we have sell orders. So just be careful. Meta, Tesla. Again, these are all the drivers of what we're seeing in the Mag 7 or in the S&P and the NASDAQ. And again, Tesla's come right up and it's hit resistance. So we'll see what happens if this, sometimes you'll come up, you'll hit the resistance level where the sell orders are. Sometimes this just stops at, full out stop. But I'll show you something that'll kind of show that here in a second. Amazon come up. Here's the bump that we had, the China bump, and then sideways since then inside the Bollinger Band. Again, we're going to open up a little bit lower. Oscillators are good, but we're moving sideways for 3 days on Amazon. Microsoft, again, another coming right up. Here's where we're going to open, getting sideways. We pulled inside the Bollinger Band, which is good. You can see what happens. And this is a nice pattern that, we're still going up. We're still above the support. We're below the Bollinger and moving up. But here we have resistance at 458.86. So I'm starting to see resistance come in on these mags, and they'll have to get past those in a sustainable manner to keep this rally rolling, to say. Google's right up on its resistance again. Okay, that was a nice big candle yesterday. 1, 2, 3, 4, 5, 6 times it's hit and couldn't get past it. So again, we're starting to see potential slowdown in the mags just by looking at the charts. Here's Palantir. Remember, Palantir was rolling. We've come up with Palantir, and again, we're right on resistance. We hit it once, we hit it twice. We tried to pop up, get to the sell order level yesterday, came back down, right back to resistance on Palantir. But again, we're starting to see in a broader area, these resistance levels are coming up because we've gone up so much. It's like shooting an arrow up in the sky. Eventually you lose velocity and it's going to turn and come back down. And that's what I'm seeing. Netflix, this was a runner, and then this was back during, when we're going to have a recession. And then we had the China bump, and you see 1, 2, 3, 4. It's just, once you see this resistance level come in, it's just hard to get by in a sustainable manner unless there's something like a catalyst to pop it past. And here's that pattern. Here's that 9 coming up, getting close to the resistance level. And we pop down, and now we're just kind of squeezed between that right now on Netflix. So again, just be careful. When you look at, some of our under the 200s, this one we've had, on the list for a while, and at APTV, okay, it's finally come up on the Bollinger and it's hitting resistance. So this one we got in, way back here is where we put it on the list, had a nice run up. You know, I looked for this to probably hit resistance, and you know, I always get out when it hits this ring line of resistance, and you know, I take the profits. And right now, this is up about $13.50 from when we put it on the list, and that's a nice profit over several days. So you're not in and out, you're not day trading it. These are the kind of things that I like to watch, you know, and see from a nice trade point of view. STX was another one that was on the list. STX came up, you know, 2 days ago when it hit resistance. That's when I would have gotten out. We've got in up here. You're out at resistance. That was a nice $20.28 swing up this way. You might have got out at the 200. You know, it just depends on what your trading plan says. But again, hit this resistance. It's just tough to get past it. That's why I just get out. You know, I get out, take my money, and move it somewhere else. That's WKS, and these are all on the under 200 list. That's WKS. We got in back at this point. It's come up. There's our China bump, come back within the Bollinger Bands. We've got some sell orders right at top with the Bollinger Bands. You could still be in this trade for sure. You know, got support at the 9, you know, resistance up here at a sell order. If you're in that, we're up about $10.72 since we put that on the list also. Cores, we had talked about this on Monday. This is a Bitcoin play, and you can see this is a nice one. It's just riding up the upper Bollinger Band, but it's not above it. It's just these I really like when there's a below and it just keeps topping it. But we do have resistance coming up, you know, from sell orders, and then above that we have the 200. 9 is a support, and 9's come down right to where our cost basis would be. Oscillator still a good, but again, this is a Bitcoin play. They have a Bitcoin treasury strategy in this particular stock. When we look at our watch list, IONQ has been on for quite a while, and I just love these from support to resistance, just following the upper Bollinger now. We have sell orders up here. We're up about, you know, 661 per share since we put that on the list. These are, and think of what we just went through this week, just with the, you know, the gap ups and everything. These last couple, they didn't do the gaps. They were just nice runners. And these are what I try to look for a nice swing trade. You don't have to sit and worry about it all that much. Like you do, you know, if you're riding up the upper Bollinger Band, you know, in a gap sort of way. And then AVGO, this one here has been a nice one. But again, you hit yesterday, or 2 days ago, the resistance level was hit and you would have gotten out. I would have gotten out of my trading plan, but this was one, you know, there's your China bump. We were already in this one. Again, if this was the China bump and I was thinking about getting in here, I wouldn't have gotten in at this point just because of you know, being on the Bollinger Band. But this was a nice run up for us also. A couple others I was just watching. Ford yesterday. Ford's above. You know, I think about Ford. It went above the 200. We had a golden cross of the 9. It's just one of these. It's going between the, you know, support and resistance. And again, you've got resistance up here at 1101 along with sell orders. So, you know, not too much on the upside. You're 1065 right now, but that was interesting to see Ford. You don't think of, you know, cars, especially in this tariff thing, you know, the stock's going up. BlackRock is another one that closed above its 200 for 3 days. You have a little bit to the upside. So it's going between the, you know, support at the 200 and the upper Bollinger Band. But BlackRock, again, after the big gap up, came back inside the Bollinger Bands and had an up day yesterday. Again, not financial advice, but just looking at some charts. And then, and that's time. I've taken way too much time for Trent. We'll get back to these charts later. I want to get over to Trent. Sorry, Trent.
No worries. I was thinking about something today, and that is, you guys can see the chart, the VIX chart here. Yeah. Okay. So this is the VIX volatility index. I've talked about this in the past, and we're presently trading right at the in between the chop bucket and the investable bucket. And for those who are new to this idea, When stocks are below the 19, or the VIX is below 19, which represents the volatility in the S&P 500, it's more of an investable environment. It's more bullish, it's more trending higher. Volatility subsides, and volatility works in both going up and going down. We relate volatility typically to the south side of things, going bearish. But with the VIX, right now we're sort of right on the edge of investable and chop. And chop bucket is when stocks move up higher and or lower very in a very quick way, very fast. And we saw that, we can see that through the chop in in different stocks, high beta stocks. Beta is the measurement of risk, how they relate to the S&P 500, for example. So when you get into the F bucket, which that's when things typically blow up. That's when we saw early, March, April, we saw the VIX in this, or April up into the 60s, and we saw markets come down. So as volatility subsides, market makers and index and traders and tactical traders have to adjust their portfolios based, in a lot of cases, to the volatility. And I got to thinking about something as Mark was talking. SPY, which is a ETF, mimics the S&P 500, and they do that by buying the underlying shares of that. And when S&P 500 futures go higher, the S&P 500 ETF, SPY, has to do the same to keep its overall price, net asset value, or NAV, in line with those futures. And so there is a major influence by market flows, 401k contributions to S&P 500 index funds, and how it moves these markets around. So yesterday, the Nvidia made a major move. It represented 17% of the overall move of the S&P 500. Think about that. One company represented 17% of the overall S&P 500, which is 500 or 499 stocks, okay? One company. So if that one company sneezes or comes down with the flu, imagine the impact. Well, imagine the impact that the S&P 500 futures drop, the S&P 500 ETFs or index funds have to adjust as well. And so this is a major balancing act that is going on underneath the surface. And I think it's one of those things, as you get more seasoned into investing, when Mark and I talk about market structure, that's sort of the foundation of your house. That's the basement. And when the basement gets weak, the first and second floors start to crumble. But when the basement, solids up and is strong, the first and second floor rise higher. So keeping this in your quiver of what am I looking at each morning or each week or each month of how I'm anticipating where market direction could be, this is one of those things. Just take into account that when you look at the S&P futures in the morning or in the afternoon, whenever, there is a whole string of things connected to that, that they're basically run on a if-then statement. If the S&P 500 moves higher, me, ETF, have to adjust to make sure my price is equal to what that is doing. And that's a major trillion-dollar influence on a daily basis. Then you bring the whole derivatives market into this, and it really makes it really dynamic. And I think that's where having this solid process of how you invest, not just how you buy stocks or how you risk manage them, but also how you research where markets are headed. And it's interesting, just all of the movement we have seen in the last 4 days after the Chinese and US tariff negotiations, it's all news driven. Nothing economically has changed, but because this news came out, all of these ETFs that mimic the S&P 500 or the Qs or whatever have to adjust accordingly. And that's moving markets higher. And as we're seeing today, it's pulling back. One other thing I wrote today in the 12 newsletter, and I also put it out on the Platinum, well, in gold as well, newsletter, is this gapping. And Mark talked about it. And if you look at the VIX here, this is a gap between 1977 and 2181. Now, if you follow the belief that gaps have to be filled, and you take this down to the NVIDIAs, the Apples, the Microsofts, and you look at the gaps that they have, I'll see if pull a couple up here. Bear with me here. Where is my 12 list? These gaps have to be filled. Well, if I'm looking at NVIDIA, I've got a gap here between 1852 and 2173 or 78. And then again, 23 to 2312 to 2493. And then again, that's 2997 to 3315. That's 1, 2, 3 gaps that have to be filled. Now, looks like NVIDIA is going to open up at 134.30. So if it represented 17% of the move yesterday, what does that mean on the downside? And then what does that mean translate into these ETFs and indexes? And I think that's what I'm looking at is, even though this has been very positive, very bullish, we're now going to mechanically, from a mechanical side of things, we're going to refill these gaps, most likely, high probability will, and then we'll retest, for instance, the 200. And in my case, the intermediate. As long as these two hold up, I'm very bullish. I'm very optimistic about where this is going, up until about $142.50, where we see resistance. But I think there's a great opportunity. I think there's a great opportunity here to buy things at a cheaper price, but also from a risk management standpoint, keep in mind that when flows go into indexes and out of indexes, that has to happen also with ETFs, individual index funds, and that major impact of 401k inflows on a first and 15th basis typically is also a big factor. So keep that in mind as you're navigating these markets. I'm optimistically bullish going forward, at least for the next 80 days until the US and China have to sit back down and renegotiate or start negotiating again. But I honestly feel like I'm in the midst of 2020, in May of 2020, after the major March, April pullback because of the pandemic. We're now sort of settling down, and we could start to see a building higher. What would push markets higher through the second half of the year? Possibly a trade agreeing on a trade negotiations with, or tariff negotiations with China, the Fed coming in and saying, hey, we're going to lower rates and lower them by 25 or 50 basis points. To me, that could be the jumpstart. We could be in that mimicking or mirroring that period of time between March of 2020 and the end of the year of 2020. So overall, I feel I'm optimistic, believe it or not. But that could change. And I have the right for that to change.
Hasn't been a half
So
hour
anyways,
yet
that's
for your
my
charts
take.
to kick in.
Yeah, well, I'm gonna stay on the positive side today, Mark.
Okay.
I just feel as though we've been here before, and markets are influenced by money flow, and that's and I think we could definitely see some positivity as we go into the second half or fourth quarter of this year. So we'll go from there. So let's open it up to the floor and questions, charts, or anything you guys want to input on.
I haven't heard. We kind of missed Patrick yesterday.
Yeah,
I'm sorry, Payman.
I couldn't make it yesterday. I'm sorry. My question to you, Mark, is I found a stock called Oscar Health, OSCR, and it's one of these growth stocks I discovered recently.
Okay.
And it looks like it has huge potential.
Oscar Health. Well, right now it's finding a little resistance as far as a swing trade goes, but it's found support at the 200. So it looks like earnings must have been pretty good, 92 cents per share. So right now it's got to get past this resistance. But are you looking at it for an investment or a trade, Patrick?
Well, it's just that I've discovered these 14 stocks that meets Kerry's 7 metric criteria,
Okay.
and there's one of them. Yeah.
Okay. Let's take a look at the weekly. Okay, weekly wise. This is a weekly chart. Closed a little above, yes, the weekly last week, and right now we're still above the weekly. So I mean, got to watch this resistance, but you know, from a long-term point of view, if you use the 50 as a guide, which you know you can on a weekly chart, you know, this may be one to watch as, you know, kind of an investment kind of deal. I don't know anything about them, but
Yeah,
Patrick, you've been pretty good on picking these.
yeah, the 3-year projected ROI is 274%.
Wow.
Where is this at? Is this a US company?
I'm not sure. I think it.
It must be. Yeah, it's not an ADR.
I sent a list to Kerry last week, but I'm not sure if he's read my email. I sent him all these growth stocks.
Okay.
Are you sending it to his personal
Yeah.
best of you? Okay. Yeah.
Thanks for that, Patrick.
That's all right.
Payment. Sorry, I
Hey,
kind of cut you off.
That's
Payment. Did you have
okay. The old adage, sell in May and go away. So we're entering the light trading season. Does that change your perspective, Trent, in any way about how you think the market's going to move?
So 20 years ago, 25 years ago, when I officially got into this business, I believe that was a very relevant statement. With program trading and high frequency trading and technical models, which is all computer based. And I think you're seeing that becoming the dominant force in markets, in market movements. It's no longer a guy sitting at a desk and punching keys versus, we're no longer there. 30 years ago, absolutely. Yeah. I think that statement is having less and less relevance on markets today. And as we've spoken here quite a bit, it's a tweet. I mean, you think about our world in the last 35 years and how much it's changed by the influence of outside comments, tweets. Who would have thought you could move a market with a 145 character statement? And that's the world we live in. And then you throw technology and AI. And I mean, AI has been around in Wall Street for what, since 79? We just didn't know about it. It's now more accessible in the last 2 years. So now you bring in the retail investor who's, programming his own models, and he's then juicing it up with leverage in the derivatives market. It changes the game, in my opinion. And I think that's where we've gone from more active management. You're a long-term investor. We all are long-term investors here, but we're now having to look at things more on a short-term basis because of these influences. And I think that's, the sell in May and go away thing, I think it's just fading. And as the technology and AI continues to accelerate, and you and I are able to sit on ChatGPT and ask a question like, create a model for me based on this and this and this parameter, and just think about what Kerry's doing. He couldn't do that 25 years ago. Now he's doing it, and now you and I have the ability to do it, and we can program that, and that can influence our trading. So to answer your question in a long format way, I don't think it has as much relevance as it did, and it's getting less and less.
Okay.
Yeah.
I would concur with that. I asked an old timer when I was back in the business, where the heck did that come from? And I don't know if it's true or not, but he said, back in the early days when the market, in New York, it got hot in the summer. So these guys they'd go to the beach or the Hamptons, and they weren't in the office being hot, and then they'd come back when it got cool. So I don't know if that's true or not, but that's what he told me. And I was naive enough to
Yeah.
buy it, and I still do.
There's a book on Jesse Livermore, who is I would highly encourage you to look him up. But he was in the during the early 1900s, and actually at one point was blamed for the 1929 stock market crash by the New York Times. But in the book, he references, they reference him going to the Hamptons during the summer.
Yeah.
And less trading because like Mark said, it was hot, it was vacation, and that's how Wall Street worked. Today, you could be anywhere in the world and run your model. So it's changed.
And we could get to 24/7 trading too. They've been talking about that for a while, and we already have that in crypto.
Yeah, I think that that's coming, and all of a sudden that once again it's another layer of dynamic change to markets and how we have to navigate them and risk manage around them.
I think though, if you're in a crypto market with Bitcoin or whatever, you've kind of you're used to that now because it is 24/7. It is kind of nice, when something happens and it's Saturday and you can go react to it if you want
Yeah.
on a crypto point of view.
The challenge with it is the majority of retail investors don't think that way. And if something came out that was really a big news headline, you can see these models which are computer driven, algorithmic driven. I mean, you could take down a market in like in half a second, knock off a couple hundred points.
Well,
And I think
that's
that's the panicking that creates that kind of thing creates.
but it happens now. I mean, it happened Monday. The news came out Sunday, Monday morning before the market, and we saw that big 1,000-point rise. It could have went the other way, but and there's nothing you can do because you can't trade.
Deep Seek Monday was an example of that.
Yeah,
exactly. Where Deep Seek came out, and you saw the chip makers blow up. So yeah, it's just I think we have to, as investors, we have to take into account there is this underlying thing we're just learning about that influences markets in a big way. So
let's see, we don't have Bob here. Bob went to Vegas for his birthday. That's why you just told me that.
yeah,
So
happy birthday, Bob.
Mark,
Yep.
sorry to butt in, but I've got two other stocks that you could look at.
Okay.
One, AR, and the other is called BB.
BlackBerry.
Yeah.
That's an interesting one. Did anyone ever have a BlackBerry? I did at one time. I had one of those little teeny ones with the little, like one button was like 3 letters.
Yeah.
Those are no fun to use.
Yeah, they were different, but see, I don't know what BlackBerry's doing, but they came down, got above their 200, got above the 9. This would have been a nice swing right here. It's a $38.88 stock. Where's our volume at? Volume's high. I don't even know what they make anymore. Paul, do you have any idea? BlackBerry?
No idea.
Yeah. Okay. What was the other one?
AR.
AR?
Yeah.
Antero Resources. Yeah, they've kind of come up and there's a nice run along the Bollinger, back inside the Bollinger, right at the resistance level. Let's go back. Let's look at this one 2 years out and see what it looks like. Whoa, look at that. Here's your intermediate support, and here's your intermediate resistance. And look at this. Up, yep, down to the support, up to resistance, down to support, now back up to resistance. Interesting.
Mark, BlackBerry is no longer a smartphone or hardware. The company has pivoted to focus on software and services specialized in cybersecurity and Internet of Things solutions.
Okay.
So,
well, I was 607 back here in February, and then it's kind of been downhill.
AR has a 3-year projection of 290%.
And that's based on plugging it into Kerry's formula. Is that what you did?
Yeah, Kerry's formula. And the other one, BB, 157, which is
Over how long of a period is that again, Patrick?
oh, it's over a 3-year period.
Okay.
Are you saying we
Interesting.
can plug into Kerry's formula now, stocks?
No, I don't think that's, I think Patrick is doing that on his own.
Patrick
Did you
is
come
just
up with-
full of resources.
Sorry?
I said
Did
you're
you-
full of resources. You have
Yeah, well,
access to things that most people don't have, I guess.
Well, I just use Seeking Alpha. I mean, that tells me everything, you know. And I got 120 stocks, so I just went through every one because the 3-year, you don't have to, you can do the formula, the 7 metrics if you want to, but the outcome is the same, and it's 100% predictable on the 3-year EPS. The projected EPS, that's the figure, you see, so it makes it very simple.
Patrick,
So
have you,
do you find that when you're doing these calculations, Patrick, that red wine or white wine is the best libation to help you do it correctly?
Maybe one glass of each.
Okay, there you go. All right, sorry, Paul.
I'm most creative at night, so I tend to have a glass of wine at night. So
Okay.
I'm at my peak then, really.
Okay, sweet. Go ahead,
Hey,
Paul.
Mark, take a look at Take Two Interactive, TTWO.
Yeah, it's got earnings today.
Oh, does it?
Yep.
Okay.
I don't
This
know.
is an example of a gap being filled.
Oops, hold on. It's coming. Too many buttons here. Okay. Did they have earnings yet, or is it after the bell? I didn't know. Oh yeah, look at that. Here's
I don't think so. Tonight, I believe, aftermarket.
Okay.
Yeah. No,
there's a
and
gap.
that's,
There's a gap that got filled right there,
yeah,
right here.
yeah. And it's
And
what,
then
it's in that
Yeah.
case, it looks like well, the first gap looks like what, a couple months?
yeah, that was earnings.
Yeah.
And then now we have another earnings. Now this gap here was the
The
beginning of
delay.
May. Yeah.
Yeah.
And it went right
And
back up
so-
to resistance.
So it's just interesting how when you see gaps like that, that's eventually they get filled to some extent. Hey, Bill, what you got?
Question, NEE, could you look at that, please?
That is a utility stock, I believe.
Yeah, Florida.
Nextera Energy. Okay. So, yep, we are moving up. Nice move up here. Let's move a little closer so we can see it. We'll go to the 3-month. Coming up onto resistance under the 200. This was a nice move. Got above went right above the the 50, came up, and now we're just coming up to resistance at 72.90. But yeah, that was a nice run too.
Thank you.
Yeah.
What about IREN, IREN?
Oh, okay.
Did they report yesterday?
Yeah, they did. I didn't get. Oh yeah, here's earnings. What did they report? 11 cents per share. Let's go back. I just want to. Here's their last earnings was 9 cents.
Yeah, pre-market, they're supposed to open up at 781. So down a
So
bit.
yeah, they're gonna be down. So they must have said
Yeah.
something.
Yeah, the estimates were 12 cents. They reported
11.
11, and then revenue was supposed to be 151 whatever that is, and they reported 148 million. So they missed.
They're still way below their 200-day moving average at $9.17.
Yep,
Yeah.
right here. Yeah, and I always, like I said, I always try to, if I'm swing trading something, I always get out before earnings, and it's a crapshoot left, up or down, but looks like it's going to go down today. We'll see where it ends up,
Yeah.
Let's see our volume. Volume's good on Irene. So it's been a nice run up since it's crossed over the 9 here a little bit. Never
Mhm.
really had a full candle per se below the 9. Then rode the China bump up, and then earnings is going to take it down below the Bollinger Band. We'll see if it goes down. You have some support here at 740. Where'd you say it was going to open up, Trent?
781.
Okay, so it's above this support level right here. So we'll see. Yeah.
Yeah.
Keep an eye on CoreWeave. They beat earnings and they're relatively new AI play.
What's the symbol?
CRWV.
Momentum
up.
stock. Oh wow, negative 74 cents per share, huh?
Just put on your
Yeah,
watch.
I always am careful about buying on the other side of the Bollinger Band. This will be moving in shortly, I'm sure, because 1, 2, 3, yeah. This must be
It
a
just
new one
became,
because it doesn't even have enough to have a
it
MACD
became
really yet.
became public on March 28th.
Okay, that's why we don't even have a MACD yet on this one.
Yeah.
So, yeah, I don't know
Okay.
anything about them. I don't know anything about them, but their first earnings report wasn't stellar, but appears that we'll see what happens.
They
Yeah.
buy chips from NVIDIA and then rent out the space.
Okay.
Microsoft,
Hmm.
all the big players. And they're relatively new, so they're deep in bed with NVIDIA.
This is
And-
one I always forget about, IBM. Remember, it wasn't that long ago their earnings came out and it disappointed. Look at that gap. And here's another gap. And it took 1, 2, 3, 4, 5, 6 days to fill that gap back in, like you were talking about, Trent. And then it just
Yeah.
kept going, and paid out $1.68 in dividends there. So that's why this candle went down and it just kept rolling, and we're coming back up to resistance at 281. And so this is one, I think if just one of those companies that could be a good investment at some point. You see, look, we've been over the 50-week on IBM for a long time, and that's kind of what I look for in investments. But again, even on the weekly, you have resistance. And look at this: 1, 2, 3, 4, 5, 6, 7 weeks we've hit resistance, back in March. And then we're coming back up and we're going to hit it again, on a weekly chart. So even, on the upside, I mean, you could stay in. You're over the, if you're an investor and you use the 50-week as your line in the sand, as Trent calls it, you could stay in and this line gets closer and maybe something happens and forms a catalyst that gets it over resistance and then resistance moves. But you can also use this in an investment term to say, okay, I'm gonna get out. So let's say you earnings here, you got out. You're no worse off than you are right now. It would have saved you this much of a down, even on an investment, but you're using a weekly chart instead of a daily chart. But IBM is just one of those solid ones that we kind of forget about, because it's not NVIDIA, or it's not, yeah,
It's not sexy.
right.
Take a look at
Sure.
this is one of Kerry's CDNS.
CD.
It looks like it's hit a
Cadence.
resistance as well.
Okay.
Kerry didn't
It's
like
had
it
a
when I
nut-
brought it up.
Had a nice run from was April 24th.
Oh yeah, yeah. It's hit resistance last 3 days. Yeah,
Yeah,
it has a nice run. Look, and this is what I
if you
like.
go back to December,
Yeah, let's
so
go
if you,
back.
it's like three
December's
times there.
Yeah, December's right in here.
Yeah,
Look at this though. Look at how here's resistance and here's where cells are. Boom, 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 and here we are again.
yeah. Then look at support there. That blue line you got going there.
Yeah, this one.
Yeah, was that at?
That's from right. Yeah, all that. That's at 299.41.
I mean, that's a channel it's basically trading within.
Yeah.
But when it comes down to that lower end, it could be an opportunity for, a short-term trade.
Yep.
It's just got to it's having an enormous amount of trouble getting through that resistance level.
Yeah, and think
Mark.
about the last couple of days, you know, it's you need a catalyst to burn it past, and you can see it's done it before, but it comes right back down. So
Can you put up
Yeah.
RK?
okay, momentum stock. We don't have any resistance on the top other than these sell orders. That's a nice run on that one. Rubik Class A, I don't know what they do, Paul. I like this because it goes between support and resistance. This is a nice pattern. I wish I had some resistance up here, but if you want, you can use where the sell orders are, about 89.65. But I really like it when it goes between the support level, which is the 9, and resistance, the upper Bollinger. This is what I call a sane market structure, you know, for this stock. It's not, it didn't gap up like, you know, as like we saw for all those stocks on Monday. It just was calm, and I like this. I like this pattern, Paul.
Take a look at SMCI.
MCI.
Sorry, go ahead, Paul.
I was just gonna say that's protection, security solutions for, you know, cloud data, you know, infrastructure. Oh, and it's in that business. So
Okay.
good business.
Yeah, that was a nice pattern. I like that.
Mhm.
SMCI, what a gap on this one yesterday.
Yeah, looks to open at 43.89. So
Oh, it's coming down. Yeah. What happened?
yeah.
Wonder what happened to make this happen.
Wasn't a news story came out?
This is super micro. This is the one that had some accounting issues, you know, earlier.
They came out with earnings on the 6th of May.
Right here, 17 cents. Yeah.
But I think yesterday I think it was somebody upgraded it or kind of thing. I think that was that one day big event. But it's another example of, you know, outside the Bollinger Band, up against resistance.
Yeah.
Is there a better opportunity buy point for this opportunity there?
Rumor
So
has
I don't trust those guys.
I'm with you, Paul.
What's that,
Go ahead,
Patrick?
Patrick.
there was a rumor that there's been a 20 billion pound investment in the company by some Middle Eastern billionaire yesterday.
Oh, really?
Yeah.
Oh well.
Apparently, the CEO was out with Trump on the plane. That the rumor has it.
Next to
There's
Jensen,
Boeing.
maybe.
Speaking of being on the plane with Trump, there's Boeing. It'll be interesting to see if the plane orders from Qatar are going to make this catalyst pump. But Boeing's had a nice run, and I think Esther was in this one, right?
That was on the list. Yeah. Let me
Yeah.
find that real quick. I'll pull it up.
Yeah. For some reason, up after market, which is unusual right now for most of these stocks are down. Boeing's up.
Yeah, because they
Take a
got that
look at-
big order, that 200 plane order from Qatar yesterday.
Was that during the
Take-
day or after market? The news on that.
I think it was after.
Okay.
Are you
Take a look at
pull up our
XLE.
XLA Energy?
Yeah.
The thing with
energy.
Boeing is it keeps on coming up in Trump's narrative, and that's why I like it.
Yeah, I mean, it's the news. It's a news deal. Yeah.
It's
You
a
know?
news thing, and if you constantly hear it, you know, people buy it. So
The problem is on the other side, he keeps criticizing because Air Force One isn't ready yet. You know, it's like, here's XLE. This is energy. Hitting right on the 50. See if we can bounce out that 50.
But it's got that gap again.
Yeah.
Another gap.
Yeah, it's a China gap. A lot of China gaps out there.
Somebody had a question about, was it hold on a second. CRDO. And then
Credo, one of
Credo.
Kerry's stocks.
CREO, I don't.
D.
CRDO.
Oh, CRDO. Credo, let's take a look. Look at that thing go. Let's pull it back in a little bit. Let me get it closer. Here's our China bump. Come right up. Yeah, we're right at where we're going to see some sell orders, which is right at the Bollinger Band also. So it's following the Bollinger. 1, 2, 3 outside is probably going to pull back in the Bollinger at this point, but resistance is at $70.40 if you get past these sell orders right here. So that's about $11 higher than where it is, but it's on a nice run. Oscillators look pretty good. Got above the 50 and maintained, which is what I like. Okay. Then we had the little China bump, but it will pull back within this Bollinger Band, I'm sure, probably today. But yeah, it's a nice run up, and you still looks
Take a
like
look
you
at
still have some room to go. Go
yeah,
ahead.
Greg was looking for it as a
CFLT.
long-term investment for Credo. Is it a good long-term investment?
Well, let me just go look at right now. If you use the 200 day, as your line in the sand, then yeah, you would be in it, as a Paul Tudor Jones kind of disciple. If I went over and looked at it from a weekly standard, yeah, now you're 33 weeks above the 50, so if you use those as your lines in the sand, then yeah, let me go back 2 years and take a look at Credo and see. Yeah, so here, 50 is a strong level. This is 50 week. You can see back here, when was this? This was in April of 24, so about a year ago. It hit 5-6 weeks, of support on the 50. And then it wasn't until, end of March that we went below the 50. So if you use that as an investment, it would have got you out at that point and then put you right back in, 3
But
weeks ago.
as an investment though, I would do more research on this company because that's not even clear what, they're mixed in with the whole AI play, if you ask me. So, but I don't know
Yeah,
what
I
they
would.
do. Yeah.
Yeah, if you're investing, that you definitely want to go look at the fundamentals and have a conviction in it for sure. I don't know what they do or what their numbers look like. Let's see what the earnings. Oh, this down they lost 3 cents a share, but man, that did pop on that 3 cents a share loss. So again, yeah, you do want to do your homework on these as investments, but as as an investment from a technical standpoint, if you use the 200 on the daily or the 50, if those are your lines in the sand, then that's a good start. And like Paul said, go look at the company, and if you believe in it, it's on Kerry's list, right?
Yes, it is.
So you can go look at his. He's got all kinds of information on it, and I'd go just to his information and study away and see what you like about it. But what was the other one that we were looking for?
Esther would like to look at CFLT.
CFLT. CFLT. Confluent Class A. Under the 200, got a nice Bollinger Band moving up. You've got some resistance at the 50, so you'll have to get past the 50. Your supports at the 20. Oscillators all look good on this one. 50 is, a pretty good level of resistance. You get past that, sell orders right by the upper Bollinger, which is going up, which is good. And then you got the 200, of course. So that'll be a main level of resistance. If you get past that, your next stop is up here at 27.77, basically. Let me see where the next level of sells are. So you can see I'm on a tight here. I'm going to go to medium. Oh, see, that moves up pretty close to right under the intermediate resistance level. And let's go see what's so loose. Oh yeah, and then the next level is way above it. So, so yeah, you got a little bit of room. That's a nice one. Let's look at the volume. Volume's good. Oscillators look pretty good. Yeah, nice one, Esther.
It looks like it runs right with the S&P though. So I'd be, it's going up because the S&P is going up. So they're functioning.
Oh, I could. A lot of companies are going up because the S&Ps are going
No,
up.
no. But I would say that's why you got those 3 big candles. That's my point. My point is that it's likely this is getting dragged up with the market. There are some stocks that don't get behave differently when the S&P, whereas this one does. That's all.
Going back
Show
to our gap talk. Here's a nice gap here, Trent, and it filled 1, 2, 3, 4, 5, 6, 7, 8. Within 8 days, it filled it back in.
There is somebody out there who runs a model with substantial amount of money who they just find gaps, and that's all they do. I mean, Take Two was an example. This one's an example. Everybody, that honestly could be a simple. I mean, it's a lot of work, but a simple trading strategy is just find gaps, play the gaps. Why is this happening?
Hey, you blanked out. Are you still there?
Yeah, I'm
Uh-oh.
here.
Oh,
Can
you're
you see
back.
me?
Yeah.
Okay.
All right.
Fine.
Anything
Hey,
else? It's 8:30 Central Time, 9:30 Eastern.
Want to take a look at let's take a real quick at the picks. I put a
Yeah,
link
what?
in the description. The
Oh, the VIX?
platinum picks.
Oh, yeah,
Yeah,
let's take a look here.
yeah, real quick. Remember how negative it was like a month ago, a couple weeks ago?
Yeah, we were
It was like
11% down.
negative like 15,
Yeah.
20%. Now we're just right at break even. That's how volatile this portfolio is. Tops are Palantir and Spotify. Those are Paul's. Scott is Opify. Mark, you've got MicroStrategies. Mike is in it with Gold Explorers. CrowdStrike. Esther with Boeing. Boeing's moving up.
Esther's moved
She-
up.
Big time. And Mike with Gold. Yourself with Berkshire. Ganesh with Mitsubishi Financial Group. And I round out the positive with HYG, which is high yield. And then we get into the negatives. But yeah, it's just interesting how this movement and risk on, risk off really affected, in this case, this portfolio. So we'll see how it ends today. It'll be interesting. But I put
Yeah.
a link in the chat. You can click it and save it. You can always go and take a look anytime. So, all right. Well, we'll wrap it up. Markets are doing their thing, and we'll be back tomorrow morning,
Friday.
same time.
Friday version. Yeah.
Tomorrow's Friday, right? Yeah.
Yeah.
Uh,
And
yeah.
we are, let me look at the markets here. We are down 200 in the Dow, 100 in the NASDAQ, and 20 in the S&P right now. So it's not how we open, it's how we close.
That's right. All right. You all have a great day, and we'll see you tomorrow. Live
See you
well.
guys.
Take
Go,
care.
Thanks for
Yeah.
go out and make
participating.
money.
Exactly.
Make
Take care,
money.
guys.
Bye, guys.
See ya. Bye.